Hello everyone, and a wonderful afternoon to all of those attending another episode of Market Snack. My name is Eamon Gebri, Head of Wealth Advisory here at Sarwa. Just wanted to wait a little bit longer till we have some attendees joining us, but I hope everyone is having a wonderful day. Hello, it is indeed D. Pleasure having you aboard again. Mellow Thimes, and Nura. Pleasure to see you. Mezer, Zaina, I'm seeing a lot of new names today. Really exciting to have you aboard. Lexi and Rasmi, thank you for joining us today, as well as Shashank, and of course the ever famous I am Farhan. Pleasure to have you today. Swapnil and Seema, thank you for joining us, as well as Hamada, Jassim, and Muhammad. A pleasure to have you today. And Due days, yes. Andre, pleasure to have you. Hi, I am Farhan. Vinoy, pleasure to have you today. And again, thank you for everyone tuning in to another installment of Market Stack. My name is Eamon Gebri, Head of Wealth Advisory here at Sarwa. Thank you for tuning in. It is a gloomy day today. For those who are in the UAE, I'm not sure if you're seeing what I'm seeing, but it's quite windy and gloomy. And for those who have children who are out of school today, hope you found some interesting activities for them to do indoors. Safe, thank you for joining us today, as well as Rivarevappa, and hi T2 as well. Again, thank you for tuning in, and hope you guys are having a wonderful day. And Maher, thank you as well. And what we'll do is, let's jump in. We've got a lot of content to cover today, and I'm excited to share with you. And as always, I want this to be an interactive session, so if you have any questions, please don't hesitate to ask them in the comment section on the bottom of your Insta Live. Thank you for the hearts, really appreciate it. Jay, pleasure to see you as well. So look, I'm going to start with giving you a kind of a market overview of what happened last week. So we're going to look at the indices. We're also kind of deep dive into what was making the news last week, and I think there's some interesting things that we can have a conversation about. Yes, Jassim, you are in Dubai, so you're feeling the wind as well too, I imagine. And then following that, I'm going to share with you some information that I think is going to put a lot of things into context when it comes to investing, and I hope it will resonate with you. And again, always free to listen to any feedback that you have about topics that you want us to explore in the future, so feel free to share them in the comment section. But without further ado, let's jump right in, if that's all right. Can I get a thumbs up or a wave for me to go ahead? Everybody's all settled in. I love you too, Abid. Pleasure to have you. So shall we? Waiting for the thumbs up. That's that button over there somewhere in there. I'll take the heart. Okay, so let's start with, look, S&P 500 last week did not have a really great week. In fact, in our last conversation, we were hovering around the -6 to 7% mark at that point in time. Unfortunately, as of today, before the market opens, we're at -9.33% year to date. We are getting dangerously close to the correction territory on the S&P 500. The Dow Jones also did suffer a defeat last week, where we're at -6.85%, as well as the NASDAQ. It's been hovering at that -12% mark for quite some time throughout the year, and now we're at -14.43%, so it doesn't look like it was a really great week. The FTSE, actually for the first time, it's been hovering around 0% year to date, but it actually had an upwards tick. Not much, you're looking at 0.11% year to date positive, not anything to celebrate, not anything to shout to the hills on. The Nikkei is -8%. The Hang Seng still hangs in the positive territory, pun on words. They're at 3.58% positive, and the Shanghai Composite is -4% year to date. So what's been happening? Of course, there was a lot of turmoil last week, and we touched upon this, and it seems to be a little bit more of a repeat news, and the situation seems to be changing quite a bit. But the US stock indices stumbled last week for the second week in a row, and it's all due to the geopolitical turmoil that we've been seeing. Every day it's been ups and downs, where they're going to reach an agreement, they're not going to reach an agreement. And of course, we're talking about Russia, Ukraine, US, and its allies. So President Biden, in a very strong statement, said last week, that he's convinced, keyword convinced, the Russian President Vladimir Putin has made the decision to invade Ukraine. That all of this that we're going through right now is really just more smokes and mirrors, and it's a little bit of a show. And he once again stated that it could be a matter of days until Putin makes a move. And this, of course, scared the market quite a bit last week. However, the US president has agreed in principle to hold a summit with the Russian president to discuss the crisis over Ukraine. The talks, which were brokered by France, will only take place if Russia does not invade its neighbors. That's what the White House said, and that's their statement. So we're all imminently waiting to find out what's going to happen today, possibly tomorrow. We're hoping for more optimistic news that they can, come to a deal so that we could, I guess, evade any potential war in Europe, which is kind of scary. But we're hoping for a diplomatic solution. Of course, this wasn't the only piece of news last week. Obviously, this is what was moving markets, but there was a lot of companies that were widely spoken about last week that dominated, and then, in fact, in one example, shocked Wall Street. And this is what I wanted to start off and talk to you guys about first. Now, I won't tell you who the company is. I actually want you to guess. And I'm going to give you a series of clues and hints as to who this company is that was widely talked about, big shock factor. And I'll start giving the clues, and feel free to just jump in and start, identifying who that company is. But I'll give you clue number one. They had just reported their quarterly earnings last week, Wednesday. Okay, so clue number one, this company, who are they? They had just reported their earnings last week. They reached, and this is, you're going to see a big smile on my face because there's a reason, they reached a record quarterly revenue of $7.64 billion, up 53% from a year earlier. So we're not talking about the lows of 2020 and then comparison of 2020 to 2021. We're talking about a company from 2021 till 2022 reached a quarterly revenue. Oh, sorry, my apologies. A quarterly revenue from 2021 to 2022 of $7.64 billion. So that's the second clue, up 8% on a quarterly basis. They also had a smashing year. And again, if there's anybody in the audience right now who could recognize this company, they had a smashing year where they reached $26.91 billion in revenue, up 61%. So again, that's 21 to 2022. So by all means, this company did amazing. Their shareholders, they received dividends of upwards of $399 million for fiscal 2022. This coming quarter, their shareholders are going to be paid 4 cents per share. And these shares these dividends are going to be paid out on March 24th for anybody who's a shareholder on record by March 3rd, 2022. And I'm going to give you one more clue, and hopefully this will kind of ignite the ideas. This company is involved in gaming, data centers, and professional visualizations. So think metaverse, right? This is what the company's, primary activities are. Who is this company? Does anybody know? No? Give you a few more clues. Their outlook for the year is going to be that they're going to, for this coming quarter, they're expected to, to grow their revenues, and from 7.64, it's expected to reach $8.1 billion. So this company's on a roll. Analysts all across the board have said this company's fundamentals. Oh, Saif said NVIDIA. Anybody else? Anybody else want to challenge Saif's call to see if it's NVIDIA or not? Facebook, Lexi, thank you very much for that. So we've got two guesses. We've got Roland, who's mentioned NVIDIA. It is D has, with exclamation mark said NVIDIA. Faisal said has Microsoft. So we've got at least about 4 companies I could potentially be talking about. Well, look, as a last clue, analysts have given this company a very strong buy recommendation before the earnings call and afterwards as well too. And for those who are really curious and they want to know, the company itself you're correct, it was NVIDIA. You guessed it correctly. However, I want to ask you guys, what do you think happened to their share price on Wednesday when they released their earnings reports? So I've just told you all this amazing information that this company beat earnings expectation. They had a record year, revenue that never reached before. They're very profitable. Their shareholders are really happy because they're receiving great dividends. What do you think happened to their share price as soon as the earnings were announced on Wednesday? Give you guys maybe a second to ponder that. Decreased. This is by Joey. Down, down, and down. I think I know a few songs will go down that route. Yes, absolutely. Share price plummeted and shocked much of Wall Street, shocked many investors. In fact, when the earnings reports were released by midday, it dropped by 8.5%. Thank you very much for that graphic, D. Absolutely, with the graph going down. By midday, they had dropped by 8.5%. And as we stand today, when I look at what's the trading value today, they're down nearly 11% from that announcement. But why? How could a company that has just had blockbuster earnings, company whose projections look amazing, they are definitely very relevant because metaverse is anything that anybody is talking about. Nvidia is definitely poised to benefit from this due to their gaming hardware and their software solutions that they have. I mean, these guys are poised to do really well. So how could a company like that suffer such a drastic drop? Well, it goes back to, the whole idea that stock valuations do not occur in a vacuum. There are many variables that could impact the performance of a company's stock. In this case, what could have possibly happened is that the equity market's behavior on that day, specifically February 17th, may have played a very integral role in what happened to their share price. The NASDAQ that day, the NASDAQ 100 to be precise, had dropped by 3%. You factor this in with all the macro level fears that are happening, such as inflation, rise in interest rates, the Russia-Ukraine crisis, high valuation of competitors within the same field. Unfortunately, Nvidia suffered. To expand on this a little bit more, Nvidia was priced to perfection. Any, analyst who was looking at this company said, look, it's a no-brainer. You need to buy into this company. But unfortunately, short-term investors don't necessarily look at all these variables in a vacuum. They look at all the different variables. And in this case, some investors thought, I would much rather go take a flight to safety, book my profits, and invest in a treasury yield, maybe in a 10-year treasury yield that's going to give me 3% guaranteed. And this is one of the variables, or one of the many variables that could have happened to Nvidia, which makes stock picking such a challenge at times, because you think you've got it figured out, that you've done all your homework, you've done all the right research, and this is a sure bet. But this is how things sometimes, the rug can get pulled right underneath you, and as to how fickle the market can be. Now, there's other examples, and not to pick on Nvidia, but there's other examples of companies who, have done really well, who've positioned themselves, have taken great strategic, decisions in order to benefit from the current times that we're living in today. For example, Roku. And for those of you who may not be familiar with Roku, I don't blame you. It may not be such a popular thing within this region. Many of us would either have Netflix, or maybe we have OSN, or would have, other cable providers. But Roku is really popular in other parts of the world. Well, Roku plunged by 22%. And actually had its worst trading day since 2018. A lot of investors kind of punished the streaming service for disappointing Q4 numbers and a gloomier than expected outlook for current quarter. So as a result, they ended up selling. Roku at one point in time had gone up by 150% in 2020, and now they're down 75% from their July 2021 peak. Another company is Shopify. And for those of you who've tried Shopify, it's really cute. It's really neat. It's a little bit more, I would say, catered to individuals who are looking to purchase goods, and don't necessarily want to go to multiple vendors and whatnot. They want something a little bit more, I would say, streamlined and something a little bit more, catered to what you're looking for. And actually, at one point in time, Shopify was rumored to have done a better job than Amazon in cornering that consumer market. Well, Shopify, unfortunately, is down by about 62% from its peak. So that's one key example right there. Roblox, and for any of you who do have children, will understand it. I don't have it downloaded on my phone because I know my daughter will basically kidnap my phone at that point in time, so I don't have it, but she's always pestering me about it. But Roblox is down about 62%, 63% at this point in time. And Netflix, of course, kind of everybody understands and knows it, they're down at this point in time 43%. Now, it's not, this information that I'm sharing with you is really not meant to kind of make you feel down, to say that the market is all, is taking a downturn altogether. It's just that, this is kind of showing an example of how, erratic the markets can be at certain points in time. And that even though you might have done great research and have great, I would say, belief in that particular stock that you had, that there are sometimes external factors that may impact the valuation of that company itself. So on that point, I want to talk about, doom and gloom. That in fact, it's not all doom and gloom at this point in time. And, to give an example, we always talk about that markets over the long term tend to go up. You shouldn't really be worried about it. That generally assets go up over the long term. It's almost become like a natural law or a universal constant, similar to the speed of light. And I'll thank my physics teacher for this, where they say, 300,000 kilometers per second is the speed of light. Well, that seems to be the consensus when it comes to investing. Take a long-term view, diversify, and everything will sort out itself. Why? right? I mean, it's great to understand that that's how things work, but why? That's a really important variable. And to kind of help you understand this and, kind of give you a little bit of background as to why this question is being posed, we had a new joiner at Sarwa just a week ago. Lovely young gentleman by the name of Daniel. He's working in our customer support team. He said, hey, man, I understand that markets will go up, but, just why? Why do they always go up? Well, to explore this, let's look at the S&P 500. Actually, in fact, we can look at any number of other indices. We can look at the Dow Jones Industrial Average, we can look at the Hang Seng, and understand why do markets go up over the long term. And I feel that as an investor, if you understand why it goes up, I think that will give you great peace of mind. It'll make you feel great and confident in your investment decision. So let's understand what are the reasons why that, in indices like the S&P 500 will go up. Well, rule number one, or actually reason number one, technological progress, okay? Technological progress has continued unabated for the lifetime of S&P 500, and of course for the entirety of the human history before that, resulting in ever increasing quality of life, continually creating value for the world. Technology has exponentially powered human ability, efficiency, and productivity to new heights. For example, there was a point in time where the steam engine was the only method for factories to work. This meant that factories and mills could now be located anywhere instead of next to rivers or for water power. It also led to the invention of the railroad, which has opened up brand new frontiers. Again, technology. The light bulb, for example, means that humans can now extend their productive hours well into the night. The microprocessor was a meta invention that single-handedly enabled the invention of thousands of new technologies, including the personal computer, the internet, and the smartphone. As technology continually improves, so does productivity. These two are related concepts because it is technology that improves productivity. A worker with an Excel document or Excel file and an internet connection can perform far more work in an hour than somebody who does not have these tools. A child today can hold and access some of all of human knowledge in the palm of their hand through their phone, a feat that was unfeasible just 15 years ago. So long as the human spirit and ingenuity continue to strive upwards, so will the companies that march to the beat of progress. Technology creates productivity. Productivity means for companies means more revenue. More revenue could potentially mean more profit. And that's what we're seeing and we've been seeing year after year. So rule number one, or I guess methodology number one as to why markets go up is technological process. The second one, and I want to kind of give you guys a second to guess as to what that second thing could be, as to why do markets go up. Think of yourself, you are a company and you want customers. You want as many customers as possible to buy your product or your service. What could this be? What is the second variable as to why markets continuously go up? And I'll give you guys a half a second on that one. Okay, that was more than half a second, but nonetheless, I hate silence, so I might as well just continue with it. Population growth, for anybody who's guessed it. As of January 2021, there was an estimated 7.8 billion people living in this world, okay? This number is expected to grow to about 11 billion by 2100, okay? I'm maybe way past our lifetime, of course. A higher population typically means a larger market for companies. And companies that successfully sell to a larger growing market become much more valuable over time. Think of Facebook. Many years ago, Facebook, when they first started out, didn't have as many users as they did today. Facebook today has over 1 billion users. That's a huge market share. Let's think of goods and services that you utilize every single day, whether it be soap, whether it be toothpaste. They have significant market share. As the population is growing, that means that's new consumers. That's more revenue that a company is generating. A company that can sell its products to 1 billion people is more valuable than a company that can sell its products to only 1 million people. In this way, increasing the population creates value, so population growth can spur economic growth, and of course the growth of the S&P 500 is an example. 25 years ago, and not to date myself, the population at that time was 5.8 billion people. So within a matter of 25 years, we've increased our population size by 2 billion people. 25 years ago, it's not that long ago. Think of Harry Potter. Harry Potter and the Philosopher's Stone was published 25 years ago. Princess Diana, God rest her soul, was killed in a car crash 25 years ago. The Titanic had premiered in the US 25 years ago. IBM's Deep Blue, and that's that supercomputer which basically challenged all the famous chess players all throughout the world, beat Garry Kasparov, who was the reigning chess champion. So 25 years ago goes like this, and that's what companies have been capitalizing on, is on population growth. Now the third and very, I think, underappreciated or underrated reason as to why indices such as the S&P 500 or the Dow Jones or the FTSE basically tend to grow over a period of time is that because these indices, they're not just a random assortment of companies. These indices are comprised of the best companies in the market. For example, to be included in the S&P 500, a US company must have a market cap of US $9.8 billion. They must have positive earnings in the most recent quarter and year, amongst other things. If a company fails any of the criteria, the next best company is ready to take its place. I remember not too long ago where Tesla was included in the S&P 500, where that wasn't the case well over a year ago. So that's an interesting example of how companies get added on to these indices because it's only the companies that are doing very well get included. When a company is no longer thought of as financially viable, again, by their criteria, it's replaced by another company. And this has happened to date about 1,100 times between 1963 and 2014 when it comes to the S&P 500. So it's always constantly changing. The 5 largest companies today on the S&P 500 are Apple, Microsoft, Amazon, Alphabet, and Tesla. Companies are all on the forefront of technology. But if you just went back 22 years ago, year 2000, the top 5 companies were General Electric, ExxonMobil, Pfizer, Citigroup, and Cisco. We don't know what the future holds. We don't know what the next 20 years is going to hold. We don't know who's going to be at top of that list, but you definitely know that they're going to be included in indices, right? And I think as a summary to what I'm talking about today, as to the importance of thinking long-term, diversifying, being patient, right? These are the key ethos. And we talk about them in our 4 rules of investing webinars on a regular basis, about the importance of starting early, the importance of diversification, the importance of keeping your investment expenses low, which is one of the key USPs of Sarwa, because we keep investing costs very low and in some cases for free if you're on Sarwa Trade. And lastly, about again keeping your emotions in check, is that I want to end off with a nice quote. It's this author, his name is Chris Gillett. He wrote for, columnist. He wrote for medium.com. And I want to read this statement to you because I think it really does a great job of capturing as to why markets go up over the long term. So bear with me while I read this out to you. Human advancement and the stock market are interconnected. Our world and our economy is geared towards growth. We understand and expect that what the world will experience in a decade will be far better than that of today. And we know that the world that we leave to those who come after us will be profoundly different from our own. Their world will be safer, will be more connected, and more unified. They will spend more of their time on leisure, they will be healthier, and the greatest problems of our time will be solved. That solution being taken for granted as a fact of life in their world. It was not only curiosity, but an unselfish love for those who could follow them that compelled our grandparents' generation to develop penicillin, the microwave, duct tape, bikinis. Each generation's iterative improvements to our species, starting with our hunter-gatherer ancestors, developed language, control of fire. That's what brought us here. And to this point, this is why we always state here at Sarwa, is that you start as soon as you can. Take a diversified approach to investing, keep your investment expenses low, and have a long-term view for your investments, and you will be rewarded for taking on that journey. On that point, I would love to answer any questions that you guys may have. I notice I've been talking quite a bit, so I apologize if I haven't given you the opportunity, but please do feel free to ask any questions. I'm here to address for you. We still have at least 6 more minutes in this time together. I hope you guys have been enjoying this conversation today, by the way. Let me know if this is the type of content you're looking to hear on an ongoing basis, or if you have any other ideas as to what you'd like to see. Okay, let me see if there's any questions coming in. Okay, there's a question here by Sulfar. Sulfar said, thoughts on VOO ETF? Why hasn't VOO been a part of Sarwa Invest? So, correct, Sarwa Invest does not have VOO. What we utilize is VTI. And the reason why we use VTI versus VOO is because we feel that VTI is a better representation of the US market. Whereas just focusing only on large cap companies, we feel that there's an opportunity cost there. I'll give you an example. In 2020, everybody would have thought of the likes of Amazon and Microsoft as being the ones to invest in, but in reality, small cap stocks did amazing. Actually, they were a top asset class in the year 2020. So what we want to do is, from a diversification perspective, that we want to give you broad market access to not only large cap companies, but also mid and small cap. Diversification is key. It's what helps you be able to minimize your overall risk and gives you a great opportunity for upside in many different markets. And that's why we've never just focused only on the US market. We know, I mean, it doesn't, goes without saying that the US is the largest consumer market in the world. And a lot of the companies are based out of there, but there's a whole world of opportunities. You've got developed markets, you've got emerging markets, you've got great specialized, ETFs, whether it be focused on real estate, whether it be focused on gold. There's any number of different asset classes that you can invest in, but just localizing it to the US market, specifically to the top end of things as well too, is a little bit too limiting in our opinion. However, if you really feel passionate about VOO, you can just simply go to Sarwa Trade and you can be able to purchase the VOO yourself and invest in it if you feel that this is ideal for your investment goals. Let me see if there's any other questions. Sulfur, thank you very much for the compliment. I appreciate it. Thank you for enjoying the content. Any other question, folks? Don't feel shy. I won't bite. I'm too far away to do that. Otherwise, it's just going to be a staring contest between all of us back and forth. So feel free. Maybe just highlight some recent product improvements that we've released in case you weren't aware of it. Sarwa Trade, for those of you who weren't aware, was launched in November 2021. Really excited about it. It was really more to kind of meet our clients' needs, to not only have long-term investment solutions, but also give them the ability to be able to invest in stocks that they're really passionate about. And that's where we've created Sarwa Trade as a great complementary solution, but even as a standalone solution as well too. So you can buy over 4,000 stocks and ETFs through Sarwa Trade. The one, couple of cool features that we just launched quite recently would be the watch list. So now you're able to kind of pick and choose companies that you want to keep an eye on through the watch list. Also market news. So some of the information that I'm sharing with you today, you'll find it available directly on your app itself. So you can stay informed. Hopefully it doesn't, sway your investment decisions too much, but the whole idea is to try to, not, receive information that's biased or information that's going to basically sway you in either direction. We would still want you to do your own research and be able to conduct the analysis to find the right, investment solution for you. So that's Sarwa Trade in itself. On the, there are more upgrades that are coming to Sarwa Trade, and I don't want to, kind of let the cat out of the bag. I think my product team would probably kill me at that point in time, but there is some exciting new features that are coming out for Sarwa Trade and also for Sarwa Invest as well. So I'll give you one quick hint. It's a nice facelift that's coming to Sarwa Invest, where you'll be able to customize and also, make it a little more exclusive to you on your Sarwa Invest portfolio. So that's something that we're imminently working on. I've seen the visuals. It looks amazing so far. There's a question here. Sulfur said, I would love it if Sarwa's transfer can be done by direct debit instead of bank transfer. Loud and clear so far. Absolutely. We've actually been taking this feedback on board, and we've actually been proactively working on a solution. And I want to kind of give you a little bit of background as to why we haven't done this so far. Okay, so one of the challenges that we've seen with giving clients the ability to invest directly by debit card or via credit card are the fees, right? And we've seen this with a number of third-party providers where they give you that flexibility, but they'll also tack on or pass the cost of the merchant fees directly onto the consumers. And sometimes we've seen it range anywhere between 2 and 3%, that for every contribution that you're making, you're losing about 2 to 3% at a time. So we've been very conscious of this because our whole ethos is about keeping your investment costs low. So we've invested in the infrastructure so that you can transfer locally, and we will take care of the transfer for you internationally. We'll incur that expense on your behalf. And that was our method or our approach to be able to reduce your overall cost of investing. Now, granted, I know that you prefer to have the investments there much sooner. Waiting 2-3 days may not be ideal, especially if you want to get into the markets much sooner. And we hear you loud and clear. So we are proactively looking at solutions. We're just going through the negotiations, trying to find a very smart way of being able to provide the service for you at a very low cost, if not no cost at all. I do anticipate at the end of the day there probably will be a cost, but I think then at that point in time it's a judgment call for you to decide whether you want it there rather quickly and willing to pay a premium to have the money there quickly, or whether you're okay with a traditional method of transferring money to the accounts, and that way at least you know it's free. Okay. Andre asked, does Sarwa have plans to work with options or derivatives? Okay, so this is on the product roadmap for Sarwa Trade, but I'd be lying to you to say that this is imminent. This is something that's probably more down mid to long term that we are looking to provide additional services. As you see it today, Sarwa Trade is free. You're able to buy stocks, zero commission. You're able to sell, zero commission. There's no account maintenance fee. There's no inactivity fee in any shape or form. So what we're looking to do is we're going to start introducing additional features such as the ability to purchase options, to be able to capture a market who wants these services. And yes, there will be a cost for that. So that will be a revenue generating tool for Sarwa at that point in time. Let me see if there's any other questions. I may have missed them and I apologize. Where on the app, BRY Smith has asked, where on the app can I access a new feature, Sarwa Digest? It might be, I'm assuming probably Brian, it might be you don't have the latest version of the Sarwa app. So what I'd probably recommend is that maybe download the most recent one. If you're an Android user, just delete and then reinstall. I'm an Android user, and I find I have to kind of wait for the cache to be cleared in order for me to download the latest version. But once you download the latest version of the app, all these features that I'm talking about are going to be available there. Now, there is also another service, by the way. If you want these market updates to be sent to you via WhatsApp, you can always reach out to our customer support team and ask to be added onto the list. And we'll make sure on a weekly basis you get the updates onto your phone directly via WhatsApp so that you have access to the news on the go itself. Okay, excellent. I think I'm well over time here, and I apologize for those who are having lunch this late in the afternoon. But I want to say thank you very much again for tuning in. If there is anything that we can assist you with, please don't hesitate to reach out to us. You can always reach out to us by WhatsApp. You can call us on our landline. You can email us. You can chat on our app or on our dashboard itself. And of course, reach out to any one of our advisors to be able to get any assistance with your long-term plan. So thank you very much. On that note, have a wonderful day. Do try to, I was going to say stay cool, but it's not that hot. I would just say try to stay less sandy because there's a lot of wind blowing around. Have a great day. Take care of yourself. Bye-bye.